Guys, as I'm starting to think about the investment themes going into 2022, one of the glaring issues that I'm seeing is still the stunningly low supply of homes. And the high commodity prices, labor shortages, and supply chain issues didn't make the problem better in 2021 at all. By some estimates, the US is short up to 5 million homes right now. That's a lot of homes that someone's got to build, but we also need to be aware of the potential affordability headwinds from interest rate increases and ongoing supply chain issues and labor shortages, which are adding to the cost of building these new homes. This is the first of 3 investment themes that I do see going into 2022, and this is what we'll dissect in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. All right, so based on estimates provided by the mortgage finance company Freddie Mac, the US is short almost 4 million homes. And of course, as I said in the intro, some people are estimating that that number is even higher at 5 million homes. Now, one thing that's interesting is while new home formations are actually slower than they were before the pandemic, some people are estimating that home builders would have to double their recent new home production pace to close the gap in 5 to 6 years of the homes that are needed today. And of course, guys, that's easier said than done because single-family home construction has suffered from a severe labor shortage that began well before the pandemic, but the pandemic exacerbated it. Additionally, as I mentioned in the intro, supply chain disruptions in the past year have pushed prices for building materials much higher. And as pandemic-induced demand soared because of the lower interest rates, prices for land also increased as well. And we all heard about the surging prices for lumber during the summer, which actually caused a lot of home builders to just take the summer off. And the lumber prices got so high that I started seeing some really funny memes where people are saying, you don't propose with diamonds anymore, you propose with 2x4s. So we're in a situation now where we have a labor shortage and supply chain issue causing havoc on the industry. And what exactly are the builders saying about all of this? Well, Pult Group, one of the nation's largest home builders, disclosed in their Q3 results that significant disruption in the manufacture and supply of building materials has extended the overall build cycles, which of course means that these issues are adding to the cost of producing new homes as well as the delivery cycles. And you can see that here because the delivery cycles are increasing as the number of authorized for construction but not yet started homes has jumped to a 15-year high. So when I see this, I have one question. Is this a demand thing or a supply constraint thing? And how would the prospect of rising interest rates cool this market? Well, according to the National Association of Home Builders, it seems to be a functioning of both variables as demand for homes is strong while inventory remains low, which puts us in a good position for home construction to continue at a strong pace into 2022. And before you guys kill me in the comments, those estimates do in fact take into account the prospect of higher interest rates and additional costs of home construction, which is expected to further decline housing affordability. So what's causing the strong demand and how can we invest profitably here in 2022? Well, I've been watching the industry very closely for many years, and my thoughts here are that there are 3 major reasons why the housing market is so strong. And possibly to your surprise, none of the reasons that I'll mention have anything to do with lower interest rates, albeit affordability is another reason why people would be driven into the housing market. But that's something you already know about, so you don't need me explaining that to you. So I'm going to talk about the other reasons. The first reason is the emergence of the millennial home buying class. The Wall Street Journal reported that millennials are leading the search for new home buying demand. They made a good point in stating that 31% of older millennials and 43% of younger millennials don't currently have a mortgage but would qualify for one. And millennials are the largest cohort purchasing in the tech hubs and in more affordable markets as well. So basically, no neighborhood is safe from us. The second reason why people are flocking to purchasing homes is, in my opinion, because they are looking to avoid the damaging impacts of inflation. There are 2 items here at play, but once again, guys, this is just my opinion. I believe that people aren't dumb. They see that home prices are rising fast due to inflation creeping up to all-time highs. And so in order to not be forever priced out, they have been rushing in to purchase a home and lock in a payment structure. Secondly, inflationary pressures are also impacting rental payments. So it's of course reasonable to expect that some prospective buyers seek out the protection of a fixed, consistent mortgage payment. Guys, we have to be realistic. Rental rates are going up in every major city that has experienced a real estate estate price boom. If I'm wrong there, let me know in the comments, guys. Also, the other interesting protection item for home buyers is that by locking in a debt amount, as inflation continues and your wages increase, your mortgage payments with a locked-in rate should become a lower and lower proportion of your monthly expenses. So as time goes on, the cost allocated to servicing your mortgage becomes lower overall to you. The final reason why I believe we have such a strong demand in housing is due to the new normal. I truly believe that the new post-COVID economy has pushed people to more rural locations because working from home has changed the work culture and helped us address one of the biggest problems facing the middle class today: housing affordability. And here's how I define it. If you only have to drive into the office a couple of days of the week, call it 2 days out of the week, you'll be more willing to locate further out of the city to be able to purchase a larger or more affordable home. And in light of the worker shortage, I believe that employers are finding that in order to keep and attract the best talent, they have no choice but to allow workers to embrace a more of a hybrid model of work, where some days are in the office and other days are spent working from home. I believe this has especially been good for the mental health of younger workers with small families with 2-income households. Ultimately, employees are benefiting from less commuting stress, more sleep, and employers are benefiting from greater productivity. I think before we didn't really know if working from home could be productive and worthwhile. Now we know that it is. So we've really changed the work culture here. I think that this new economy lasts, but feel free to disagree with me. But let me know in the comments below why you feel that way. I learn a lot from you guys in the comments. So then here's the real question. How can we invest in this housing boom? Well, there's 3 types of builders that you should be aware of. The first are your tract builder. These are your production builders. They will be in a few neighborhoods in a city and build hundreds of homes. These builders will often start building without buyers and own large tracts of land which they are committed to building on. These guys are the most susceptible to a downturn in the housing market as they have 2 major risk factors. The first is that they'll have concentration risk, as they'll commit to building and selling a large amount of homes in one location. The second is that they start building without buyers and they may have a significant amount of unsold inventory. This is exactly what happened to large tract builders in 2009. They were stuck with many unsold homes in less desirable locations with no buyers. In this market that could be overheated and we potentially have an asset bubble, the tract builders are the riskiest ones, and so they're the ones that I'm staying away from. The second type of builder is a speculative builder. They will speculate on a lot by purchasing it and start building on it without a buyer. They are similar to tract builders in that sense. However, the main difference is that they don't own large tracts of land or lots in just one neighborhood. They have the advantage of owning lots here and there, and thus they are geographically diversified. So if any one area experienced an oversupply issue or a significant decline in jobs, the overall business is not materially impacted. Now, the difference between tract builders and spec builders is that because tract builders are building more homes on one piece of land, they will be able to build those homes at a cheaper price because they're able to build economies into their production. Where spec builders, although they're less risky, their home prices are less competitive to tract builders. Finally, the third type of builder is custom builders. They will not start on a home until the buyer is signed up. These are true service providers, as they will likely not buy the lots either. Although this business model is the most riskless, it results with the priciest option for buyers, and thus custom home builders generally only attract the least price conscious customers. So as you can imagine, these companies don't grow as fast. My favorite organization in this type of space is the spec home builder. I personally like them because they're generally more geographically diversified, and thus they're able to handle geographic shocks and can redeploy capital into underserviced markets as opposed to being concentrated in markets that are becoming oversupplied. And from watching previous videos, you guys already know that my 2 favorite spec builders are LGI Homes and Dreamfinder Homes. I've done videos on both, which you can find on the channel, but if I were to summarize it quickly for you, I like LGI Homes sub $100 a share. I was able to buy it at that price early in 2021, and I rode it to the $160 per share area. I would absolutely love to buy LGI Homes sub $100 per share again. Also, when it comes to Dreamfinder Homes, this is a company that I'm liking more and more. I really would like to buy them sub $15 a share, but really I'd like to get them around that $12 per share mark. I currently do own a cash secured put on the name name with an annualized yield of around 25%, but it's out of the money and I don't think that it'll exercise in the money. And so I might be looking to redeploy into this name in 2022. Now guys, home builders are not the only investment theme for 2022. Betting on technological change is a major focus by many of the large technology companies, and you can buy into this bet for free as their valuations are largely not taking into account the upside from potential breakthroughs. I've summarized that as well as what I believe to be the other important investment themes for 2022 right here.